Another market closing live stream. Boy, oh boy, we had a little bit of a sell-off. It did bottom about 10 minutes ago. Just a heads up, if you are a buy the dipper, take a peek at the S&P 500 and some of our favorite stocks as they appear to be U-turning right now here into the end of the day. So do take a look at this here. You'll see a U-turn is happening on the pain that we're experiencing right now in the S&P 500. We've got a U-turn happening in a firm. Yeah, look at that nice U-turn here off that support line. It's almost kind of expected at this point that things are just going to go back to our support lines, our old stuff. It's a little surprising that it went down this far, but I definitely increased my position in a firm substantially today. We talked a lot about this in the course member live stream that just ended, but look at this, a firm having a little bit of an end of the day rally push again. So I do think this bounce off of 92 here is really welcomed. Did give me an opportunity to really get in a nice increase of position here. Today, I bought multiple different levels today, including here recently towards this bottom. We were just on the course member live stream watching this U-turn is what we did. Which, of course, if you're not part of the course member live streams yet, or you're not part of the courses, use the coupon code XMAS. Price goes up at the end of the day of Christmas. That's December 25th. You all know the drill. The price never gets cheaper. You just lock in access. So if you like the content you get here, I expect you'll also love the content that you get in the courses. Take a look at, though, you do have a volatility up 10%, but Roku pulling off about an 8% gain today. I did establish a good position in Roku yesterday. I want to say I'm somewhere in like 240K or something into this one. So I did do a nice dip buy on this one when it was right at about 198 to like 201, right in that range. I bought a couple different times. And that was another one that we bought in the course yesterday. That one's up 7.6% today. But hey, there are definitely some things. Well, some things are up, some things are down. More broadly, the market is definitely feeling some pain today. And there doesn't really feel like there's a good reason for the pain that's happening today. It's more, it's being defined as volatility before quadruple witching. It's being defined as settling into the Federal Reserve raising rates or whatever. It's being described by so many different things, and quite frankly, I think it's weird that look at that early Santa Claus rally. Yeah, oops. It's being described as just unclear in terms of why the market is really falling. But I also think it's very interesting that your 10-year continues to go down, because a lot of people keep asking me like, hey, Kevin, like mortgage rates are going to go down, right? And that's not necessarily the case, because look at the trend of the 10-year over the last 6 months, and the 10-year usually drives mortgage rates. So 2-year also continuing. Hold on, this should update. It should be at 0.62. Hold on a sec. The charts. There we go. See, look at that. It's so weird that after the Fed meeting on the 5-day, we're at really essentially lows. A week's lows on the 2-year. So the bond market is saying we're doing the right thing in terms of inflation. The stock market is just confused. You're seeing some valuation compression without a doubt almost across the board. Some things are selling off for a reason, like the dilution, the newly registered shares at backed holdings. Big problem. Newer company, this sort of thing happens. The Consumer Financial Protection Bureau letter for companies like Affirm and other buy now later plays, which honestly I think is nothing but FUD. It's just really nonsensical, which is exactly why I've been buying the dip on it. I think the CFPB sending a letter about TILA, which is Truth in Lending, which keep in mind, I studied TILA to get my NMLS license, which is what you need to become a licensed lender. And it's not that big of a freaking deal. So I think it's a little excessive. Somebody here says, a loving sponsor for 11 months. Well, thank you, Prof. Wally. Do you see NFTs as the next evolution of stock ownership? Well, I think there could be two questions in one you're asking. Either you're asking, do I think stocks are going to get settled on the blockchain in the future? The answer to that is yes. Do I think that NFTs are like stocks? No. I think stocks are your percentage ownership in extremely valuable and powerful companies in America and throughout the world for a broader extent. But shares of ownership in Tesla, Affirm, Enphase, Etsy, Apple, Amazon, these are assets. Unfortunately at this point, and maybe it'll mature, but I think at this point the NFT marketplace is one of I would say 95% speculation. Even CryptoPunks, a very high level of speculation, which don't get me wrong. I'm not saying there's not money to be made there. I almost bought CryptoPunk, but I didn't want to tie up that much of my portfolio in Ethereum in the event there were larger market falls. And, I've been able to take advantage of lowering my cost basis on all of the crypto that I own by selling almost all of my, actually at one point I almost sold all of my crypto because I had a little Axie left over. Almost sold everything probably about a month ago at this point. Bitcoin was closer to 60,000 and people got mad at me for selling. And I'm like, no, it's not that I'm anti-Bitcoin. I'm just going to buy it back lower. And fortunately, that's what I've been able to do. Now, that's not to say that it can't go from 48 to 37, right? But fortunately, I've been able to lower my basis there. And I've been doing a similar thing on things like Etsy or Enphase. Not with my whole position on those, but I probably sold about 20% of my Etsy or Enphase during the more euphoric times. I wish I had sold closer to 50%, but now I've rebought those positions. So I'm just really trading to get a discount on those shares. Now, it still makes your entire portfolio feel bad because it's kind of like, oh, no, you're getting, your portfolio is going down. But really, you're increasing the amount of shares you have for a lower cost basis. Let's take a listen to this for a moment.
Information specifically on the ability for consumers to accumulate debt. We know this is very popular with the younger generation when they're shopping. And then secondly, as well, data harvesting. And so because of that news, you're seeing it weigh heavily on companies like Affirm. We're also seeing Block there, as well as PayPal, Afterpay, Zipco are companies that are being requested to provide information into this trend to the Consumer Financial Protection Bureau. Back over to you.
Christina, thanks so much.
Boring. I got to take this off. There we go. I really see it as a beautiful FUD dip. Oh, what's the news now? Hold on.
To have a preferential recommendation for the mRNA vaccines, either Pfizer or Moderna, over the Johnson & Johnson vaccine. This came after a meeting that started at noon today, where primarily the discussion was around the risk of the very rare blood clots that have been seen with the J&J vaccine, also with the AstraZeneca vaccine, which is the same technology. So here they are not limiting its use, but they are putting out a preference that the mRNA vaccines be used because of that risk, and suggesting education for folks who still prefer to take the J&J shot. You're not seeing a huge reaction in J&J stock over this. They have pursued this vaccine on a not-for-profit basis during the pandemic. And it is, of course, less used already than the mRNA vaccines, but a change here in policy from this group. Guys, back to you.
Meg, thanks so much. Much appreciated. Straight ahead, we're gearing up for reports from FedEx.
Okay. Interesting. Okay. It's incredible that, I suppose it makes sense that Johnson & Johnson is not really moving on that because it's for non-profit purposes, but still, you'd think that'd still be like a slap in the face for Johnson & Johnson not to get that recommendation. But oh well. So lots and lots of red. Let's see if anything is particularly sparking substantially towards the end of the day here. AMC kind of flat towards the end of the day. I'm looking for the spark lines just to see an inflection here. Volatility dropping towards the end of the day. That's consistent with some of the price increases that we're seeing as we go into the close, as that buy the dip continues. Let's see here. Bitcoin holding on to that 48K barely. DocuSign, Lemonade rotating up a little bit towards the end of the day here. Carnival Cruise Lines down 2.1%. Gosh, what is that Carnival at now? Carnival now at 1750. I just want to reiterate, I'm personally, this is not financial advice, I'm recommending to myself to stay away from the recovery stocks until we get to that critical point. If you have not watched my video yet on the convergence of what's going to happen when Delta crosses Omicron. Highly encourage you watch that. Just type in Meet Kevin, Omicron into YouTube, and you'll see it from yesterday. Very, very important. But so I'm recommending myself stay away from these. I don't make that recommendation to anyone else because I'm not your financial advisor. Let's see. I want to look at Apple, some of the megas. So Apple back to 173. Still a luxurious price for Apple, honestly. Goog's been pretty much hanging out at these levels here. Somebody here says they got an offer to buy BlockFi. So I actually own some BlockFi. So I don't think I can, in a non-biased way, answer that question for you. Let me try to give you my generic response to private equity. I think most private equity is substantially overpriced these days. So I'm not the biggest enthusiast for private equity right now, especially when we have larger discounts here in more mature stocks where you're going to have more liquidity. That said, if you get in early enough on some of these rounds, I don't know what valuation they're talking about there, Robert. So maybe let me know what valuation you're thinking. But look, I think BlockFi makes a lot of money. They provide a lot of liquidity to institutions. They make a lot of money doing that. I think they're a phenomenal platform. I don't love the spreads, but then again, I don't love the spreads over at Voyager either, So anyway. Would snap calls be a good idea? Calls are very risky in this environment. I would say call options are pure YOLOs. It's very important to know that. I do own call options. Here, I'll tell you. One sec. I have my portfolio sheet. I have, as a percentage of my portfolio right now, just under $1 million in options. Some of those are sold puts. Some of those are which are upside down at this point, or some of them are call options. So as a percentage of my portfolio, definitely upside down on my recent option plays. They have substantial potential, but yeah, I mean, the potential will only become realized in a market rally. So, let's see. Let's add those together. There we go. Anyway. Okay, going back to the Weebs. What do we have? We have 11 minutes to go. Okay. Somebody says they have 16K left after buying the dip yesterday. And then somebody also is asking about AVAX. I actually bought AVAX yesterday. I sent that alert out to course members. But me personally, I've gone into margin a little bit. Now, I do think there's always the potential that the S&P 500 ends up going through a rate tantrum and that we get something more in line with a 10% S&P sell-off. Entirely possible. So I'm not going to go all in on margin because I do want to preserve some in the event that something like that happens. That way I have access to some margin in the event the market just goes like ape to the downside. And what I'd probably do with that case is if we had a 20% sell-off in the S&P 500, I'd probably preserve somewhere around 10% of my margin and wait for as much as I could what would it feel like max pain, and then just buy call options, which is insane. But probably is potentially what I would do. It depends what the volatility is on the individual stocks. You be careful. Call options is a great way to lose all your money, but they can be very, very, very profitable if you hit the timing right. So that's also why I'm hoping for a rally going into the new year here, because I've got some nice call options that are waiting for some love. But oh well. The best time to buy those is when there's pain, though, right? That's always the hard part. Always the hard part. So Affirm is almost fully recovering from its second dip of the day. See, here's your first dip, and then this was the second dip, and it's kind of fully recovered the first dip. The second dip, which is nice. C3AI still getting burned. Adobe Sound. Yeah, nice rally of a firm into the close. I'm glad I was able to really add here. Robinhood's at 18.18. Which I just keep in mind, the options that I bought on Robinhood, I want to see what their pricing looks like now. At least some of the options, because I have a few different options on Robinhood. But look at how ridiculous this was. So Robinhood's at 18.18, right? Okay, watch this. I thought this was so ridiculous. See these $10 options right here? Look at this. These are January call options for Robinhood, okay? Robinhood right now, folks, is trading for $18.80. A Robinhood call option with a strike of $10 is going to cost me $8.20, which means my break even is literally what the share price is right now. Or maybe you're paying like a 10-cent premium or something. So, like, I thought to myself yesterday, and I still think that way to myself, I'm like, I'm basically getting, like, if I'm going to buy shares of Robinhood, I may as well just buy the freaking calls because I'm paying zero extrinsic value, essentially, for those shares, which is insane. That means you're getting basically free leverage. So it was too good to be true. It's still that way right now. But anyway, it just gives you an example. These are the kinds of things I look for. Now, there's no guarantee that that option is going to do well, right? There's no guarantee of that. But let me give you a comparison. Let's go. And I haven't looked at this before, so we're gonna just do this raw. We're gonna do it live. Okay, what are you doing, Weeble? Let's go to options on Tesla. Let's go to what are at the money options here. Okay, so look at this, or go down to like 800. Okay, so you go down to like an $800 option here. You're paying a $25 extrinsic value, right? You see this 820 here, or sorry, 800. I'm paying 155 here. We're at 925. So that actually means I'm paying about $25, $26 of extrinsic value. At Robinhood, it was like zero. That's crazy. So let me look at Lucid just as an example. Get something deep in the money here. Let me go. Go $30. I'm paying. See that even over here, I'm paying $1.50 as an extrinsic value over here. $1.50 to about $1.60. $1.50 to $1.60 is what you're paying for a $30. And if you go deeper though, even deeper, it gets a little juicier. See, look at this. See these 20s over here where you've got a good amount of open interest. Where you go deeper in the money, that's where your X gets really, really tight, and I like that. You're paying about, here it looks like you're going to be paying about 50 cents of premium. If you get them for about 50 cents, probably, depending on where you can get them. If you can get them for roughly where the market is right now, maybe you're getting them pretty close. But anyway, those were interesting for me. And you'd have to be wanting to buy those shares. As a worst case, of course, because if you're going to trade the option and the market's still down, you're going to get screwed. If the market runs, you're going to do very well. But that's the nature of investing. You make a bet. Then let's see here. What else? Yeah, Dave & Buster's back down. What did I say about Dave & Buster's? The other day it was at 37, and I'm like, this is the stock that always goes between like 30 and 38 and just back and forth, back and forth. It's happening again. Hippo, I think this is an all-time low for Hippo. Yeah, we talked about back. No, it was lower. It was at 250 not that long ago. Oh, what's just sparked down over here? Oh, no, okay. I think that glitched. Cardano, 120. That's not that bad. Okay, volatility hanging out at 8%. Purple's back up 15%. That sold down so much. I mean, even now, I'm going to look at Purple again here. Look at this. So Purple sold down to $8.79. Now it's $11 now. But let me see something. I'm going to look really quickly what their expected earnings are. So if I look at Purple, which is a ticker symbol that's really close to PayPal. Okay, here we go. So Purple is expecting almost $1 of EPS in 2025. Wow. That means you're paying about probably 13, 14 times forward earnings for Purple right now. And they're still expecting to grow 15 to 25% over the next 4 years. It's not bad. Yeah, there's just another one that's gotten the world of hurt. Okay. Okay, so we talked about Bakkt, talked about Affirm and the Affirm recovery, Adobe slightly recovering, Wayfair at 190 is also kind of crazy. Robinhood 1818, Vidya back to 280, 485-ish. Enphase still sitting at that 190 level. SoFi 1431, again under that 1470 line. Cloudflare was 129 for a while today. It's 132. It's still pretty decent. Ooh, Tesla fell a little bit more here into the close. Ooh, are Rivian earnings today? Is that true? Oh, look at that. We just during our stream, I missed it. Not that I would have done anything, but it fell to 922. Let me see here. Earnings calendar. FedEx, Steelcase, and Rivian. Oh, very nice. Okay, 2 minutes for that. Okay. Let's log in. Here we go again. New York City shows canceled. Cases rise. Office is empty. This is the time to load the boat. That's what I'm doing. You know, I feel so bad for me. You know why I feel bad for me? Because I always got to be the guy that when the market's zooming, like it was, a month ago, I'm the guy who's like, guys, too much euphoria. I'm selling. I'm shorting ARK. I'm selling. I'm putting some cash on the side. I do that. And then all the comments are like, oh, here's Dr. Fudd. Here's Dr. Fudd. He's just trying to get a discount on his portfolio. What an sweet day. There's Dr. Fudd. Then the market falls. And I'm like, all right, this is why we saved up cash. This is it. This is the time to buy. Let's go. And then all the comments are, man, that idiot's catching a falling knife. Look at that dumbass. That's why most investors lose money, though. And that is why I feel bad for me. Oh, it's great. Okay. So today, Steelcase. Oh, if you want to buy a put on Steelcase, you got 10 seconds to do it. Steelcase is office furniture. How do you think that one's gonna? What do you think they're gonna forecast? Watch it go up anyway, though.
There are some bright spots, though, including Dow Utilities average, as we've seen a more defensive tone to this market in terms of what has been outperforming a record high there, for example.
Oh, look at them with their Napa champagne or wine. I guess that's not champagne. That was wine. How cute. Okay, Dow is down 0.09%. S&P down 0.88%. NASDAQ down 2.47%. Russell down 1.95%. Those wine people can go drink their wine now because the market's so down. Honestly, I will feel so bad if I ever ring the bell and it's a red day. although maybe then you just have to wear the buy the dip shirt, you know? But like it's so much more exciting when everything's green. Like everybody's happy except the short sellers. Okay, Steelcase, FedEx, Rivian. We got 5 minutes for them. All right. Those are the ones that we're going to cover. Rivian options are implying a 9.2% move. FedEx options are implying a 6.5% move. Steelcase, don't have the answer on that, but I can find out. Steelcase, let me see here really quick. Steelcase is implying a 6.8% move. So Rivian's got a 9.2% move. Rivian's got the big move that we're expecting here. All right. Let's see here. Well. Is anything moving in the aftermarket yet? No. Too early to say. Other than Wayfair. Gosh, Wayfair's gotten smoked. Okay. Look at the day, though. Purple up 16%. Big U-turn there. Roku, good 7%. United Wholesale Mortgage Company. Okay, what? Other than the idea of rates going up, which lowers refinancing and loan activity, the United Wholesale and these companies have sold off like crazy. I mean, they almost look like value plays. Kevin, when would you tell someone just not to trade? Just not to trade? Like to trade stocks or not to get into the stock market? Well, when things are at all-time euphoric highs, you probably don't want to buy call options, right? Yet people do all the time anyway because of FOMO. So price target cut by Wedbush on United Wholesale Mortgage Co. I interviewed their CEO. I like the company. Price target announced 6.5 by Piper Sandler. Upgraded to outperform after sell-off at Wedbush. Multiple different ratings here, really. Okay. So, right. Okay, 2 minutes for earnings, folks. We're going to get Rivian. We're going to get FedEx and Steelcase, theoretically all at the same time. Peloton going up, another little sign that maybe we're going to have some of that COVID drop. This can't just be an Omicron sell-off, though. I mean, it's probably going to be the most amount of cases. I think we're all going to get it. I told Lauren I think there's a 95% chance that our 3-year-old gets Omicron before the end of January. 95% chance he gets Omicron by the end of January. In other words, I've resigned to that. The 3-year-olds don't wear masks. I think they start masks at like 4. Even if they did, honestly, you probably still get it. I mean, they're children, slobbery, gross children. I love children, don't get me wrong, but they're definitely still slobbery and gross. Anyway, Tesla down a full 5% today. Good old pain. Rivian was down 5% today, leading into earnings as well. Cloudflare, talked about them. If you haven't seen the Cloud4j or the Log4j video, you should watch that. Will you buy Lauren a house if you're wrong? And he doesn't. Well, the problem is we don't have a house to buy. There's nothing we want on the market. You test your family often at home for COVID? We do. But it's a requirement of our school anytime they show symptoms. And so we test early. We just want to do the right thing. If you're sick, you should get tested. I know it's inconvenient and a hassle, but it's not fair to other people. Okay. Rivian. Okay, there's an 8K. Oh, wait, hold on. FedEx is out. FedEx comes out with operating income of $1.6 billion. The narrows their fiscal year EPS to 18.25 to 19.25. That's down from the consensus of 19.64. The adjusted EPS was a big beat, though. Adjusted EPS comes in at 4.83 versus 4.26. So EPS beat at FedEx, but guidance was low. You had a reduced guidance, no surprise, at Steelcase. Revenue miss at Steelcase. So Steelcase misses guidance and what did I say? It was like, hey, you got 10 minutes left to buy puts on Steelcase because what do you think they're going to do with guidance? Sure enough, comes in lower. But then again, sometimes the things go up anyway. No, so Steelcase is going down right now. Although it's fluctuating in the after hours. We'll see. Not a lot of volume in the after hours. Let's try FedEx and let's see what Rivian reported. FedEx, with that big beat, even though they lowered guidance, that big beat on EPS, they're up 5%. Really good. And then Rivian is up 1.5% in the after hours. We only have an 8K for them, which I'm going to pull up now. Yeah, I'm trying to see if I can get a summary of information on what's in Rivian's, but it appears I might have to look at it myself. And I'll just take a second. Okay, here we go. So let's see here. Okay, 8K, here it is. Current report, let's get it out. There we go. Let's see what their 8K is. Can I get this press release? Okay, this is just telling us when their earnings call is going to be, so that's boring. Rivian, the full text of the press release and shareholder letter. Oh, shareholder letter, here we go. Okay. Key highlights, 71,000 pre-orders. Estimated annual capacity of the planned Georgia facility, 400K, 200K for Normal, Illinois. They're reiterating the 100,000 pre-order there from Amazon. Raised $13.7 billion in their IPO. Okay. This is Motor Trend Award. Remember, this is supposed to be a sales pitch. It'd be nice to have some updated guidance on how much they actually think they're going to deliver when. We generated negative gross profit of $82 million as we began manufacturing the R1T. The negative gross profit relates primarily to significant labor and overhead costs from the large-scale Normal factory. However, given that we just started the ramp of the production site, the facility produced limited quantity of vehicles in the period. In the near term, we expect this dynamic of vehicle production to be significantly less than our manufacturing capacity, and it will continue to have a negative drag. This is expected. That's very, very normal. Operating expenses increased. Makes sense. R&D was almost twice what it was last year. SG&A was, oh my gosh, $253 million compared to $68 million for the third quarter of 2020. Why? Oh, they're scaling their sales operation, commercial offices, and okay, well, that makes sense. Scaling up to actually start selling. Tremendous opportunity for us to help drive the future of the transportation market. However, building out our organization and infrastructure to support our growth requires significant investment. Well, again, that's why they IPO'd. That makes a lot of sense. The funds we raise will help us accelerate. They're going to have the conference call, I think, is going to be the most interesting part. Forward-looking statements. This is just a disclaimer. So no guidance, at least that we could see here, as to when they're going to deliver their first vehicle. Although they've already sold some vehicles, I know that. But when they're going to start rolling some more off the line here. First mile demo. 60 mobile. By the end of December, we plan to have over 60 mobile service vans and 8 service centers. These service centers will be in California, Colorado, Illinois, New York, Utah, Washington. 24/7 customer support. Okay. 2024, they want to get to 400K vehicles. Cool. That's lofty. That's pre-orders. Pre-orders mean nothing. Nothing. They gave us no updated guidance in this document for Rivian on what we think in terms of deliveries, and somewhat upsetting the market. I mean, the darn thing's down 1.1. It's like 1%. I mean, now it's down 0. So the market's digesting this, but this is just a sales pitch letter right here, unfortunately. No, don't get me wrong. I like Rivian. I want Rivian to succeed. It's just too early for me to invest in these because I highly expect Rivian and Lucid to substantially miss on delivery numbers, which the markets are going to be very upset about. And then it's those fear dips that I want to buy. In the meantime, in the after hours, FedEx is continuing to move. It's now up 8.1%. How's Steelcase? Steelcase, oh my gosh. Oh, wow. Now I wish I bought the puts, man. But I only gave us 10 seconds in fairness. I'm like, hey, you got 10 seconds to buy puts on Steelcase. What do you think they're going to guide? Well, I would have been right on that one. But, you know, with earnings, I've just learned not to have SOMO because it's so hit or miss with earnings. Okay. Anyway, yeah, Rivian at $60 starts getting sexy. Like that I would like. You know, Rivian at substantially lower valuations. And again, I'm not trying to poop on it. I'm excited about Rivian. But yeah, I thought their IPO was a high valuation, so I'm gonna wait on that one. Okay. Anything else? What else? FedEx running. We actually have Rivian up a couple percent right now in the afters. But it's fluctuating a lot. It's fluctuating between 1 and -1 in that. Sometimes it's a little too early in pre-market or aftermarket to tell. No real big movement to the downside. Looks like we had most of our downside during the day. So we'll see how this develops. Their conference call could be very exciting, though, especially if they can give us some guide on how many deliveries they think they can get out in 2022. That would be really cool. How's Lucid moving on this? Lucid. I'll set up 0.2. Yeah, I see the comment here. Somebody says, smart not to give guidance, otherwise you'll get sued. Yeah, honestly, probably true. It's just what the market's going to want. But yeah, nice sell-offs on a lot of things today. Big old sell-off on a lot of things today. Cool buy the dip opportunity. SoFi, Tesla, Enphase, Affirm, and then some of the big ones too if you're into that flavor. Still staying away from recovery. And yeah, let's look at the front page here of Bloomberg for a moment. Yeah, the unemployment numbers are a little bit of an issue. I agree with you. Okay, so New York COVID case rise called alarming. You've got Citadel Black Work allow remote work again. You've got New York City sees offices empty, shows canceled as COVID wave sweeps in. Yikes. All right, well, people who work at Rivian said they are having major supply issues and are shutting down the main assembly lines daily. Well, yeah, it's probably to be expected. I mean, it's a crappy time right now, you know? I mean, like, one of the most frustrating things I could imagine for a company would be having customers who want your product, having the employees to make the product, but then not being able to get aluminum or steel or chips for your stupid computers, you know? Like, it's so sad. The supply shortages, it's dumb. The good news is there's no lack of supply. Like, supply shortages don't affect my ability to bring you beautiful courses on building your wealth. I'm not affected by those supply shortages, so you can take advantage of that Xmas code as much as you want. Link down below. There's no way Lucid is pumping out 80 cars a day. There's no way. Zero chance. Okay, I'll give it a 1% chance. But I think it's next to zero. Okay, folks. I think that's pretty good. Thank you so much for being here. I got to go. Appreciate y'all. Love y'all. Stay strong. the time to buy is when everybody else is bitching. Remember that.